Hello, welcome everybody. Okay, that is interesting. I am very severely out of focus. Get in focus, get in focus, get in focus. Come on, get in focus. That is weird. Okay, well, it will probably focus eventually. Eventually, hopefully. Yeah, so today we're going to be resuming the Japanese Company Handbook Challenge. Last time we got to, I believe, 1911. Sumitomo Forestry, and we determined that that was an A company. We can do a quick recap on that. So 1911. Yeah, the company has a market cap of 962 billion, right? So it roughly trades around like 6 to 7 times USD. Sorry, 6 to 7 times $1 billion USD, basically. They have quite a bit of cash and investments, but they do have quite a bit of debt. So they actually have net debt. So enterprise value is 1.4 billion if we exclude long-term investments, including it is 1.1. The good thing is that it trades at 1 times. Forgot to put my mic right in front of me. 1 times book value. They have a pretty generous dividend. They recently did a stock split, 3-for-1 stock split. So current dividend yield is roughly 60 yen per share. So that's a 3.9% dividend yield. And it trades at around, if we exclude long-term investments, 7 times. If we include it, around just under 6 times. And then PE would be, around 8 times PE. And last time what we did was we did a very quick comps analysis using Koyfin, essentially. And what we determined was that what's happening here is that they are penetrating the U.S. Single-family home and multi-family wooden building homes, basically. And they have been generating more and more market share in the U.S. region. So, in addition, they do lumber, right? So the lumber is exempted from tariffs, so it's actually unaffected. So if we look at the top home builders in the U.S., DHI, LEN, PHM, NVR, they trade at, their market caps are far larger than Sumitomo. And Sumitomo has been consistently investing in specific regions, acquiring certain construction builders, just to broaden its portfolio. It's also acquired one of the largest #1 market share home builders in Australia. So now they have also a base in Australia. So basically, based off of because most of their profits are generated in the U.S., for them to trade at these multiples, and for them to be continuously growing, and for them to be consistently having the opportunity, because they are an underdog, they are so small, they have a lot more room to grow. Whereas if you argue like, hey, how does one of these companies go from, let's say, 22 billion to 44 billion, or 45 billion to 90 billion, it's much harder, right? But it's much easier for a company to go from 6-7 billion to double that, right? So yeah, there's a lot more growth potential in Sumitomo. So if the idea is, hey, we have a Japanese company, because they're in the Japanese market, but they are competing in the U.S. market, they should be trading more in line with their U.S. counterparties. And if that's ever the case, if the market ever thinks like that, then you would get an increase in valuation. But the thing is about this company is it's not super cheap, right? It's not, but for the growth opportunity and for the upside, it's cheap. But I wouldn't say that this is like an S tier stock. This is more of like an A, maybe A minus. So you get a good dividend, you have good growth potential, and then you have decently low valuation because of the existence of long-term investments and cash. So at 5.6 times the EBIT, it's pretty cheap. Okay, so moving on. Now Sumitomo Forestry. Next is 1914 Japan Foundation Engineering. A major company specializing in construction foundation engineering works, such as ground improvement, established for boring and grouting. Okay, let's take a look at these margins. Quite low. Slope protection works, down foundation works, anchor works, heavy machinery works, injecting works, maintenance and repairs. So this seems, oh, then they have an overseas segment too. So this looks kind of interesting. 1914, let's take a look at that. Could be more difficult to analyze given they have so many segments. So they traded as low as 565, immediately shot back up to 700. So let's see, 560 increase 140-ish. 25% drops 25, increases by 25. And drops 20. Okay. Moves a lot. The share price moves a lot actually. Yeah, 2020. April, shot back up, went back down, shot back up. Okay, this is good for people who trade. Take a look at the profitability. Okay, very low margins, but it has improved. The margins have gotten better, despite them being in low single digits. So I'm very careful of companies that are trading in low single digits. Yeah, market cap hasn't really gone anywhere. Except for in 2022, 2021, but been pretty stagnant overall. Okay, so recent quarter 1.4. This might not be that most recent. Koyfin is like usually doesn't have the most up to date, but here's like 1.4. So looking at around 11 to 11.5 billion enterprise value. So let's look at income statement. How the last 4 quarters been? So Q4 2024, 24 increase of 30. Okay, so revenues have been going up. That's positive. 2 billion. So they're trading around just under 6 times EV. Net income 2.2. So really good last 3 quarters. Sorry, last 12 months. 2.2 on this is also just around 6 times. So not bad. They've been doing well. And they could also have some investment securities. We can take a look at that. So not bad. Let me review the income statement because they're at 20. They're at 30 now. But what was only an annual basis? So revenue hasn't grown, and suddenly it just shot up. Okay, so that's something to figure out is why. Oh, I should change the ticker. We're now looking at 1914. This company is Japan Foundation Engineering. What's cool is that they have a overseas segment, so that could be something we can look into. I do like companies that expand overseas as well, so they're not as dependent. 3.2% div yield. Market cap was 13. Let's see if they have the filings I'm looking for. Oh, they have English side. Let's see. Let's see how their English side, what they have here. Best solution of the earth. Okay. Best solution for a new social platform and environmental conservation. Okay, active in the field of construction foundation, focus efforts into research and development through developing pioneering and unique construction methods and new technologies, and actively seeking technical alliances with overseas companies. Greeting outline history. So it doesn't seem like they have any investor relations stuff here. So going back, somehow this has not converted itself. So let's just translate. Partial correction of, okay, fiscal year end. Let's take a look at this. Okay, we're gonna have to download some of these filings. So that correction, okay. Securities reports. Then they have a semi-annual. Do they ever do a investor presentation? Doesn't seem like they do. Let me just double check. Welcome. We have another new viewer. We're looking at 1914 Japan Foundation Engineering. Just trying to figure out what led to the last 12-month increase in revenue. Currently just finding the documents because this is a Japanese site. Just looking for the documents. Okay, it doesn't seem like they have any investment presentation, so we're just going to download two documents, the securities report and also the most recent quarter stuff. So I'm going to do that over on the side. Now, while we wait, what are some Japanese stocks you guys are currently looking at? Oh, that was a securities report, never mind. Can rename that. Okay, next document. It is translating. All right, we have one document. One document done. Waiting for the second one. Okay, got it. Awesome. Okay, resume. Okay, so they had a correction in their financial statements, so let's read what it is. We would like to inform you that there has been some corrections to the information contained, being corrections to numerical data. We've revised the figures based on the findings of our audit firm and thereby making this correction. What is the correction? Okay, corrections are underlined. Okay, cash flows from activities, from probably operating activities, cash flow investing. Yeah, so operating income was misstated, I guess. I don't know if it's on downward or upward. I'm more interested in sales, why sales was able to increase so substantially. Wow, there's no commentary at all in this document. There's no commentary. Come on. That's boring. Okay, let's look at the securities report then. Yeah, so we can see here sales was quite stagnant for some time, and then it suddenly rose, and then that has allowed their operating profits to increase substantially. Also, we can see a trend in operating margins increasing despite revenue staying around the same, so that's a positive sign. Net assets growing. Employees. Oh, so they had less employees doing more work, so that's interesting. So less employees doing more work, of course, is good for margins. Plus, they're not under-investing in their employees, though. This could also be a result of some type of optimization, if there's something like, they mentioned AI or something like that. So they have two affiliated companies in the JAFEC group, JAFEC group, is engaged in slope protection work, down foundation work, anchor work, heavy machinery work, injection work, maintenance and repair work, environment and conservation work, and related businesses, as well as construction consulting and geological surveys. Interesting. JAFEC USA, established in Nevada, USA, in 2009 to enter the overseas construction business, and OK Soil was acquired as a subsidiary in April 2010 due to a track record in urban ground improvement and overseas construction. Interesting. Affiliated company Japan Facilities Management provides dam facility management and construction consulting services. Interesting. So they own 100% of JAFEC USA, and OK Soil. Okay. Construction work, 363 employees. Construction consulting. Just see the labor union somewhere. Oh, they do not have a labor union. Okay, that's good. I don't know what the company does beyond that though. Business risk, you're gonna go to business risk immediately. Okay, business performance. Okay, regarding business performance for the consolidated fiscal year, orders received in Japan were tough due to postponement of construction starts and intensifying competition for orders. On the other hand, orders received by the U.S. subsidiary fell significantly below the previous fiscal year due to backlash from a large-scale order received in the previous fiscal year for ground improvement work at an LNG refinery terminal. But overall orders exceed the plan due to orders for dam reinforcement work. As a result, total domestic and overseas orders were down 5 billion yen year-on-year to 27.7 billion yen. How was it? It was down. What? That doesn't look down to me. That looks up. That looks like that went up. mainly due to, hold on, let me just double check this. Because the orders received went down, but sales performance went up though. Revenues went up though. So that's interesting. So orders received went down. Interesting. But revenues went up. Is that more important? Right, but then this has... Oh, order value went down. Order value went down. Okay. Okay, that makes sense. Mainly due to slope protection work at 3.8, anchor work at 1.467, heavy machinery work at 13 billion, roughly injection work. Okay. Sales in Japan were tough due to a decline in orders, but sales far exceeded the target and results of the previous fiscal year thanks to steady progress at the U.S. subsidiary on ground improvement work. As a result, overall sales increased by 6.7 billion yen year on year to 30 billion, mainly due to slope production work at 3.3 billion, anchor work at 1.25, heavy machinery at 17 billion, and injection work at 4 billion. In terms of profits, although some branches in Japan experienced very tough results, profit margins for construction projects improved and results exceeded the plan thanks to price increases due to design changes and improved properly through cost reviews for construction projects nearing completion. Meanwhile, the U.S. subsidiary also significantly exceeded the plan and results of the previous fiscal year thanks to steady progress in a large-scale project. Ground improvement work for an LNG refining plant base. So this seems very one-off, though. It seems pretty one-off. Doesn't really offer much, like, confidence in terms of the recurring nature of the revenues here. Didn't have a revenue breakdown. Okay, so protection work went up, down foundation work went up, anchor went down, heavy machinery construction went up substantially. Heavy machinery construction, injection work, maintenance went up, environmental conservation construction, civil engineering. Orders placement, yeah. Hello, Luke. Welcome. Hello. Thanks for joining me today. Luke has been very helpful. I had a question on one of the stocks that I was researching, and because I'm not based in Japan, one of the apps didn't allow me to. The app was Line app, which is what a lot of Japanese people use to do messaging. It's like similar to like our Messenger or WhatsApp or whatever, but they use Line. I tried to download Line, even though you're supposed to be allowed to in Canada, but then somehow it just didn't work. So I messaged Luke because he's a pretty active viewer of mine, and yeah, he was able to give me help me do a little bit of research, help me out a little bit there. So that was very helpful. So thank you again, Luke. Okay, so completed construction 19.7 for next turn 12. Construction carried over from previous periods 10.6. Orders placed 21, so total. Okay, spill over and then orders placed, so they have 32 billion, and then completed work is this much, and this is how much they have access to move over to the next period. Okay. I see. Oh no, this is last period, and then last period they had 12 orders or 19, so slight decline in orders, but total orders is around the same, slightly lower, and then they completed slightly less, and then they're spilling over 12.7 here. Interesting. Interesting. So results were slightly lower, but not too bad. Okay, so we spent a little bit of time on this company. I just want to, okay, so let me just recap. Let me think. Okay, so it's 11 times. Remember, if I remember correctly, it's around 6 times. Yeah, just under 6 times EV/EBIT, and then just under. How's their net income so high? How did that happen? Oh, interest and investment income. So, because of their cash balance? Because of their cash balance. Okay. Interesting. I just don't see how they can expand. That's the problem. So then the question is, how, was it lucky that they got this type of work? Government agencies, private sector. Oh, so they have government contracts. Interesting. What is their outlook for next period? We need to download that. Okay, so 30.279 next period day forecast 29 1.46. 1.46 on on a little like 11-ish enterprise value, so that's, let me think, 8, 7 to 8 times EV/EBIT, and then at 980, looking at 13 times PE next period. So not great, not bad, not great. Let me just convert this one real quick. So, quickly convert this document. The thing to figure out is there any growth potential? There's not much growth potential. It's not going to trade much higher, I feel. And then another thing to look at is how much investment securities do they have. Okay, so we have translated. Give me a second. Okay, so revenue drops, operating income drops, net income drops. Oh, they have been acquiring more shares. So interesting. Okay, so cash has actually gone down. Securities, short-term securities have gone up a little bit. Accounts receivable has gone down, so that's good. Bills receivable also gone down, so that's also good. They need a lot of machinery. Okay, so wow. Okay, so they have 5 billion in investment securities. So actually, if we factor in that valuation, then we got around 11 times enterprise value before. So if we factor in the investment securities, that drops around to 6. Right. So 6 times enterprise value. So on an enterprise value basis, it's cheap. It's cheap. So 6 on 1.5 is gonna be 4 times, right? Around 4 times. Off last year's results, very good, right? It's gonna be less than 3 times, around 3 times. 980 Yeah, the question is, since they're in so many different categories, how are they going to continue to grow? So let's look at future outlook. So looking ahead, public investment is expected to remain solid, and private capital investment is also expected to continue its recovery trend, supported by strong corporate earnings. However, the environment surrounding the industry is expected to become increasingly severe with the shortage of skilled construction workers. That's what we see across the board. That's been mentioned by a lot of construction companies, is saying retaining or attracting talent is difficult, becoming more serious, and the prices of construction materials and labor costs continuing to rise. Yes, so their Japan labor wages have increased. In addition, our U.S. subsidiary, the next phase of ground improvement work at an LNG terminal, which contributes significantly to our consolidated performance for the fiscal year under review, is not currently expected to begin, and therefore sales and profits are expected to decrease significantly compared to the fiscal year under review. Having carefully considered the above domestic and international circumstances, the group targets these rates. I'm curious about their U.S. operations and whether that has any, like, scalability, or can it grow? Like, that's what I'm wondering. Yeah, so when revenues are over 10% overseas, they have to report it. So here it is more than 10%, so they are reporting it. That's 784. This is last period. So what is current period? Oh wow. Oh wow, so that's a significant increase then. So then the question is, can they continue this? Like, is this sales one-off? And the customer is from Bechtel Energy, Inc. That's interesting. So the question then becomes, like, how do they grow that? Okay. Then outlook section here. See, there's further commentary on 10.260. Heavy machinery construction went up substantially. So probably was contributed from that segment. Yeah, 8.66. So yeah, construction, we're probably in that segment, honestly. So they had a media management plan. Let's take a look at that real quick. Second quarter, let's see. And they're repurchasing shares. What's book value of this company, real quick? So, okay. $23 billion book value. Company's trading at 13 billion. So it's trading at half times book. Interesting. Okay, this is worth filling out, so I'm gonna fill this out. Feels like an 8 here. Potentially 8 here. Oh, I don't want to be using this actually. Oops, my bad. Here's my blank document. Here we go. Not super exciting, a little boring, but they're quite diversified. There could be some US growth component that people are missing here. If that's the case, then it's probably trading too cheaply. At least that's what we're hoping for. So, okay, so. Japan Foundation Engineering, ticker 1914, last quarter fiscal year 2020, let's call it 2024. This was at least that's not correct. Ignore the 2020, that's not true. That's this year for sure. I just didn't translate that properly. So, share price, 684. 684. Okay, let's see. Shares. So they've been buying back shares quite aggressively, it looks like. So that could be the angle that we need to be confident in this stock, is the share buyback program. I have to look into that, so I need to put some share buyback program. What else? Hold pre-seed expansion in US. What else? What else? We can look at dividend yield a little bit. Dividend yield. What other thing could be interesting for this company? Yeah, I'll focus on these for now as they come up. Yep, there's some short-term securities. That's interesting. And then the big thing is that they have investment securities that are worth a lot. Short-term debt. Oh, they paid that down. So 450, anything else? Okay, lease obligations. Long-term borrowings, 3350. Anything else? Lease obligations. Nope, nothing else. Good. Okay, so previously they had more net debt, I believe. Let's see, it's 3 billion here, and then okay, so they had short-term borrowings, so they just refinanced essentially. They just reborrowed. So yeah, so they paid it off, and then now they have a new debt. Yeah, they have long-term debt now. So debt became due. They paid it off, and then okay, so the difference from last period hasn't been too much, and then book value. Yeah, 0.57 times book. And the NCIs. No. No. Okay. Tangible fixed assets is 15. So we do need to pay attention to depreciation, because it seems like a very capital-intensive business that they run. Yeah, the market cap is around 13 billion, and then their tangible fixed assets are already this much. That's something to look into. So there's a huge uptick in ordinary profit here, probably because of investment income, is my guess. Dividend, what is their dividend? 22. Oh, so they lowered it. Lowered it in favor of buybacks though? Interesting that they lowered it. Any amortization? No. CapEx. Okay. Okay, so let's take a look at what historical depreciation has looked like. Okay, around a bill, 900 to a bill. Recent quarters a bill. And then they did a pretty large CapEx recently. CapEx is usually around 1, then suddenly 2, 2, 2, and then period of low. Some periods you spend 2 billion on CapEx. And 1. Well, they have 13, right? So does it have a useful life of 13 years? Blended, roughly. What's last 12 months? Let's see. 1.1. CapEx is 1.1 as well. Okay. Let's see if there's any analyst coverage. There is not. Okay. Do some guesstimates here. given they spent 2 recently, this could go up. $1,300 capex. Does it feel like they underinvested in their tangible fixed assets? Let's take a look at the balance sheet real quick. Nope. That PP&E looks pretty normal. Obviously, they have more capacity now they have to invest, right? So if they needed to build something in the U.S., then it makes sense that they invest for some infrastructure. Oh, there's a long-term investment thing here now. Interesting. Okay. No, doesn't feel like they're underinvesting. So I'd say that we just do 1,100. That's fine too. We can even do 1,200, sure. Okay, it's enterprise value including long-term investments. That's the most interesting here. Yeah, and the fact that they trade for less than 1 times book. So they're probably cutting dividend to buy back shares. I think that's what the idea is. Take a look at what other, do they have price to book multiple here? 0.5, 0.4, 0.7. Okay, so historically it's traded around 0.5 though. Historically been cheap. They just don't have a way to use the cash. So then the question is, okay, will they be able to use cash? If they can use cash to further expand in the US, then that'd be really good for them. Yeah. Oh, so they have, okay, they have some construction work that they're, Nagai Technos, Obayashi Engineering, renewal of bridges, Kawanishi construction of Shintome Expressway. So I would look at these and be like, how big are these projects compared to their typical? But they do have orders, right? So you have to look into what their order flow could be like. Just domestic. Oh, government and private sector, and then adding to in total. Okay. Their medium-term plan. I think I saw something called the medium-term plan earlier. I think that's quite important. Excuse me. Oh, share repurchases. That's something we wanted to look at too, right? company is constantly buying back shares. That's definitely good for the company. Yeah, low ROE because they have, these are all low margin business. Low margin business, potential for operating leverage, potential. A lot of cash loss in investment securities. So interesting. So they had the approval for 1 million of shares to be bought back, and then they have they acquired just under 800K. So they are actively buying back shares. They spent 500 million yen on it. Interesting. Spent 500 million, yeah. Last period didn't spend much though. So that's very good for them. That's very good for the company. They're buying back 500 billion of shares every single year. On a how many billion? 13 billion. Plus a 3% div yield. So if you combine the buybacks and the div yield, it's not bad. So currently it's 684. We'll see it's valued at 600. What does it look like in that scenario? 3.7%. 11 times, 12 times. Yeah, 13 times PE. 3 times 3.2. 3 times EV EBIT. Okay, I'm gonna put this in the A- category. A- category. Not bad, not great. Fair buy shares. Quickly do that. So A-, I want 4. and foundation engineering 3% div yield, management consistently buying back shares. This is not consistent. I guess they did buy back shares, but it wasn't. I don't know how consistent that was. Let's double check. So historically, they have bought back quite a bit of shares. Nice. How come it didn't show up in the last period? That's very strange. It was very, very strange. That dividend payment of 300. Acquisition of shares 500. Yeah, so not bad. That's what I said. The key points are: 3% dividend yield, management consistently buying back shares, low margin, seems stable, potential outperformance in U.S. operations. Need to determine if this is a one-off or there's more potential here. Should look at medium management plan. Yeah, low multiples. Yeah, so mainly from that perspective. I'd say it's a much better entry at 600 than 684. So something you can add to your watch list if you're interested. So. Yeah. Okay, next stock. So let me close this stuff real quick. Okay, Tomoe Corporation has grown since the development of structural systems named Diamond Truss by the founder in 1932, a forerunner in the construction of gymnasiums, pavilions, and other long-span structures. Also boasts a track record in the construction of electric pylons. Strong in developing new technologies, including electromagnetic shields. Electromagnetic shields for hospitals, interesting. The use of rooftops of long-span structures and temporary jack-up turn method for bridges. The real estate leasing business utilizing the company's own land, such as the former plant site, is a stable source of earnings. Okay, let's take a look. Okay, not bad. High single-digit margin. Steel structure, construction, and real estate. Okay, so mainly do steel structures. Gymnasiums and pavilions. So this would have been good for during like leading up to the Olympics, right? I feel. Or currently, given that Japan has like that Japan Expo thing going on in Osaka. 1921. Oh wow, it's just been on a rip. It's just been boom, 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 boom. Interesting. 56 million. Okay, improving profitability. Okay, so around 10% before went up a lot in 2022. dropped. Has increased recently. What is this very high net income margin here? Probably due to some type of investment return, potentially. No. Gain on sale of investment. So they sold off their investment securities. Interesting. Ooh, pretty high multiple. That's not normalized, so that P doesn't take that with a grain of salt because they added 13 billion of net income to that. 12 times doesn't look very cheap. They have a lot of cash. So let's see here. So a lot of cash, but not a lot. So maybe they invested a lot of it. Cash, short-term investments, long-term total debt. How has revenues improved over time? They're at 35 right now. Oh, so it hasn't actually really improved much. It just returned from pre-COVID. Slightly above pre-COVID levels. So not that interesting. So if we think they can achieve 3 on a normalized basis, that's still pretty high. What's the value of their long-term investments here? Does it say? They have 30 billion of long-term investments. Well, they sold off a huge chunk of it. So they must have done very well in there. They must have done extraordinarily well. Wow, and this is with selling off some of it? What did they invest in? Just Bitcoin? What did they invest in? That's some crazy number here. So 16, 20 long-term investments, steadily going up. This has to be some type of really massive return somehow. Let's take a look at cash flow statements, see how much they invest usually. So marketable securities, if we look at an annual basis, we'll have a good idea. So yeah, annually they don't invest that much. So they bought 3.5 billion of something. And yeah, their portfolio has just gone through the moon. 1.5. Oh wow. So yeah. Very interesting. So they invested in something that increased a lot in value. So because of that, their enterprise value is quite low actually. So let's see here. So if they have 30, let's say 30 billion, so that's 26. So another investment securities play. 26 on 6 times. 6 times. If we say normalize as 3 here, that's too expensive for the core business. What do they do? Structural systems. Yeah, no. Then I like 1914 a little more than this one. This would not be categorized in that area. So I would put this in like unless you understand structural systems better. But this would be in a C or B tier. But if you know something about this, then could be something for you. Next, Daiwa House Industry. Prominent home builder originated in the Kansai region. Okay, getting a little bit cold. I'm gonna quickly grab a shirt. Okay, we're back. Okay, so another home builder. Let's take a look at their, oh, they also have overseas, so 13. Single family houses, rental housing, condominiums. Oh, they don't do property management. So this is going to be a pretty easy pass, potentially. Let me just take a look. So that's gone up quite a bit. Ooh, wow, $30 billion company. Around 20, let's say. So a large company. Decent margins. Just need to figure out our angle here. A lot of debt. That's not good. So 2 on top of this would be 5. 5,000 billion. So 5 trillion yen. So this is like $50 billion enterprise value company. 50 on 10 times. 10 times. PE is also 10 times. Okay. What is their 3% dividend? How much long-term investments do they have? 225. 225. So not a lot. Doesn't really put a dent because they have way more debt, right? So how have they grown revenues? 5.4 now. Okay, still a consistent grower. Probably have some competitive advantage. And doubled. Yeah, not that interesting though. I would put this like maybe like a C or B tier. Like, it could be interesting if you're into this type of stuff. Not my type of opportunity. It's pretty stable, so it's not bad. Put some water at the bowl and get some water. $1926 Raito Kogyo. Founded in Akita Prefecture in 1948 with tunnel waterproofing works as mainline. The head office is now located in Tokyo. Inheriting a tradition started with waterproofing works. Operation expanded mainly to rock fall and landslide prevention, ground improvement, strengthening soft grounds with solidification materials. So construction overseas ratio 9%. Pretty healthy margins. Around 10%. Wow, also going up a lot. What's with these construction companies? Oh, they're significantly buying back shares. Significantly buying back shares. That points to potentially trading below price of book. Potentially. Pretty decent revenues. Enterprise value. 138. Oh, a lot of cash. A lot of cash. Okay, that's around 27 on 138, so that's like still at 110. 110. 110 on still 9 times. Yeah, let's call it 9 times. 9 on this though is quite high. So it's like 15 times PE. What's the angle here? What's the angle here? So they have a lot of cash. 1.2 times book. Between 1 and 1.2 times. Consistently, okay. 1 to 1.4 times. No, I don't see an angle here. It does have a lot of long-term investments. Did they somehow also get lucky with their long-term investments? So 16. So 27 plus 16 is 43. 43 on this. So slightly under 100. So 94 billion enterprise value. So if we factor in that, then sure. Dividend, all right. I would wait for this to get cheaper. Not cheap enough. So I'll put this in the seed here probably. Okay, next. Seki Sweet House, a major detached house builder ranked at a top level for industrial houses, prefab. These margins look low single digits. Detached house and rental houses, remodeling and rental housing, and rental housing management, 26%. So 9% maybe. 1928. So what I would be looking for is a disconnect here, where it's like everyone in the industry has gone up a lot, and then somehow something is lagging, potentially. Okay, it has been up to, gone up 10%. Nine, 5. Nine times, 10 times. 2.1 on 1.4 of debt. So about 3.5. 3.5 billion enterprise value on. Okay, just over 10 times. Again. Multiples was more debt. What balance sheet? Did they have any long-term investments? Oh, a decent amount. Decent amount. 3.5, so it's 3.2. How's their income statement doing? Are they growing sales? Okay, it looks like they have been growing sales. So 4 billion. Sorry, 4 trillion. 4 trillion yen of sales. Okay. Oh, they have doubled. They've doubled in 8 years revenues. Operating income hasn't necessarily doubled. It's increased, but hasn't doubled. So don't see the operating leverage here. And not that great of an opportunity. Okay. Okay, I need to use the bathroom, so I'll be right back. I'm giving myself a 30-minute break. So I'll come back at 6:55. Alright, hello, I am back. I am back. Oh my god, the sun is right in my eye. I lean forward. Okay. Next company, Nitok Construct. Okay, I have a new proposition. I was just thinking about this on my break. How is there a way to expedite this process, right? And I thought of something. So instead of me going through them one by one, I am going to input them into a watch list, and then I can filter through it, right? And then I just pick, anytime I go through companies, I just filter through them, and then I just pick the best ones to look at, and then I think that would be way faster than whatever the hell I'm doing right now. So let's do that. I think that would be a much better process, I feel. So I think every 10 would be probably a good, or every 20, maybe every 20. Yeah, I think this would work. I think this is a much better process. Let me move this. Can I move this? Can I move this upward? Yeah, there we go. Chudenko, Kandenko. Kinden. Oh, Kodensha. Oh, another Sumitomo. Then Sensu. Nippon Densensu Kogyo. How many is that? Okay, a few more. I think I'm on to something. I think this will expedite the process so much better than me going one by one. I think I like this. Rice curry. It's called rice curry. Oh, Muscat Group now, they changed it. Okay, so this should help. So I need a couple of things. So I need MCAP. They have enterprise value over there. No, that's not good enough. So let's alter these columns. So I would like the enterprise value to be next to there. I would like to know what net cash is. Actually, that's fine. Long-term investments, financial statement, utility. last quarter, of course. Okay, so last price, do that here. CAGR, total return, EBIT margin, PE, EV/EBIT. Short interest can go at the bottom. What else want to look at? Profitability, EBIT margins are good. Let's see, what are net income margin last 12 months is fine. That's fine. Annual, sure, we can do that as well. Okay, I think we'll start off with this first. I think this should be good. Okay, what do I want to filter by first? So we'll do some cheapness process first. Ascending, okay. So Cadentia does not allow me to expand it. Okay, sure. 7.4 times PE, next 12 month, damn. I'll have to upgrade for this? What the heck? Okay, something up with that company. Oh, div yield would be interesting too. Let me add that in too. 4% div yield, 7 times PE. EV/EBIT 7 times. Next 12 months seems to be like they're dropping in profitability. Don't know why. Sanyo Engineering. And B margin way too low. Sanyo Engineering looks interesting. Okay, so we'll got a group worth looking into. Where did that go? Yeah, some of these are 27 times, 51 times. These are going to be just automatically no's, I guess. Huh, they don't know. None of these have the long-term investments? That's not possible. That's not possible. I highly doubt none of them have long-term investments. Or let's filter by profitability. I feel like that's interesting. Into group, 26%. 15 times PE, 6 times EV/EBIT. I like that. Free cash flow a little bit low, but that's okay. Market cap 32 million. Damn, this is like a micro. Oh, 33 million. Okay, okay. That's okay. Cash dividend 3%. Really high EBIT margins though. Let's take a look. Probably very limited financials though. Yeah, July 2024. So this can be hard to analyze given we have limited information about this company. Yeah, very limited. Provides M&A medication and advisory services in Japan. It also offers management buyout services. The company is incorporated in 2007 and is headquartered in Chiyoda. So limited financials, I'm going to skip. Just going to skip. What the frick just happened here? What happened? What just happened? I literally had a... Wait, hold on. Bruh. Did I just get fucked over for no reason? What? What the fuck just happened? Did something collapse on itself? What? Sorry, give me a sec. What is going on here? Okay, I'm gonna have to review my stream real quick just to determine where I left off because that's confusing. I don't know how it's possible my watch list just disappears. I just created it and now it just disappeared. That doesn't make much sense to me. Okay, now I'm very confused because literally we were on this one, and then after switching over, it somehow got rid of everything. That is, fuck me. How did that happen though? Okay, well, it wasn't that much work. I guess I can, here's what I'll do. I'll duplicate this list. I'm on the free plan. What the fuck? Oh, okay, so maybe that's why. Give me 1 second, guys. That should not be happening. I should not be on the free plan. Okay, I see it. I must have, I must have, okay, maybe, okay, I don't know what's going on. I just have to pay for it. Okay, I'm somehow on the free plan, that's why. I'm just gonna quickly, give me a second, I'll be right back and pay for it. That is annoying. Like, what the heck, man? You're gonna midstream cancel my subscription. Oh my god. Okay, we're gonna do this. Give me a sec while I enter my card information. This. Okay, we're back online, guys. That was really freaking annoying. Yeah, we'll just, okay, what we're gonna do, duplicate list. Call this be August. Move it to the front here. Move it to the front here. And then we're gonna just delete everything. Bulk action, delete. Okay, clear. Yeah, I don't mind, yeah. Yeah, I don't mind this. Okay, we can do that. We'll just figure out something and just do what works. Okay. Okay, back to the grind. Oh my god, I don't know where I left off. Okay. It wasn't that cool. I mean, some of these companies weren't that interesting. Wait, I should be at 1911 at the very least, yeah. Been through this, been through this. We went through this, went through this, went through this. Intergroup, yeah. We got off the intergroup. Okay, so. 1931, 1934. Nice. Okay, so I can just do this. Nice. That one. 1941. Good. 1942. Nice. 1944. 1945. 948, Densha. 1948, 950, 1951. You know what? I like this new type of method because now I can look at. I think the process could be something like we look at 20 companies at one time, and then we pick the top 2 or 3 that are the most promising out of this, and then yeah, and then that way we can go through 20 at a time, or rather than which is like 10 pages at a time. So that would make going through all the companies super fast, honestly, right? If you think about it. So cool. I like that. I like that a lot. Okay, so let's do ascending. 4% dividend, market cap of 140 million. Prefer this not to be in USD. There we go. Okay, so no cash, no debt. So we're looking at Kodensha right now. Looking at Kodensha. Margin's kind of low. PE 1 billion, free cash flow, so 20 times that. Has a 4% div yield. CAGR over the last 5 years. Oh, pretty good. Pretty good. Okay, let's take a look. Actually, we should isolate this list to the most promising, right? So if we think, like, if this works out, so let's put that here, because it is promising. What just happened? Oh, okay. Okay, so that was one metric of cheapness, and then we can also look at it from the perspective of margins. So the highest margin out of that group. Wolves hands, okay. Market cap 5.6, enterprise value 7.8. So income margin 10 P, 10 times EV, EBIT, 10 times free cash flow 414. Probably limited history though. Might be hard to look at. Chudenko CAGR 16 times 10%. 9.6 times 7 times EV, EBIT 17 billion free cash flow. Not bad. Okay, so we can look into that. Chudenko Corporation, so some net cash, 160 roughly. 20 times no. So this is a no. No. Probably a no. 18 times. I'm just looking for any big discrepancies between market cap and enterprise value right now. So this might qualify. 7% div yield, 12 times PE, about 3.69 EV. That looks interesting to me. So that looks interesting. One thing that's missing here though is I don't know what the okay, we'll just click all of them and see which one actually shows up, because okay, that changes things completely. Okay, so 121, 122, fiscal year, last 12 months. I mean, this and last 12 months should be exactly the freaking same, honestly. Okay, so I only need one of these, so that's cool. So we should do that. Move that up here. Yes, because if they're long-term investments, they have a lot of it. Then I can look at enterprise value post that. Can I do a custom column? Ah, I can. Okay, so enterprise value EV, and then we want long-term investments in the last quarter. Very simple. A minus B. Oh, I should call this something. Yeah, should be including it. Yeah. And then we put the what the frick is this? Oh, let's get rid of that, yeah. FSFQ, remove that. There we go, okay. So I want to look for really large discrepancies. Oh, I can even do an alternated EV over EBIT. That is EV including long-term investments. I can do that. I can do a custom column like that. So this is a new one. So EV over EBIT including LTI. can't include my own. Oh, that's okay. I can make it from scratch. Enterprise value. And the second one would be long-term investments. And then the third variable would be EBIT. Last 12 months. We could also do an EBIT that is the last year as well. Fiscal year, yeah. So I guess we should do the LTM version first. LTM. We'll follow the format that they use. Okay, so like that. So it would essentially be pretty simple. It'd just be equal. Okay, it would be A minus B divided by C. That's it. That's it. Correct. And then can we duplicate this? Can I duplicate this? I would like to duplicate it. No, I can't. Okay. Oh, that's fine. Let me just copy this. Fiscal year. So this one would be enterprise value. And then we'll do EBIT. Long-term investments, we need that. Okay, currently there's no one looking at the stream, so I'm just going to quickly look at my portfolio real quick. Yeah. Shouldn't affect anything if no one's looking, right? So it's fine. Yeah, today's a good day for our portfolio. Okay, so what do we want? We want last quarter, long-term investment. Yeah. Okay, same. So pretty simple. A minus C here divided by B. Fiscal year version. Cool. And then essentially we want to add that in. Add both of those in. We want to there, yeah, that would be comparable. Yes, we want like that probably. Cool. Okay. Even better. Okay. Oh, I could even add a percentage. Even add a percentage. So okay, so we just look at how my things looks right now. See, I would like a percentage because if there's a percentage, that would make my life a lot easier. So 7.9 times 9 times 7.8 times 8 times 7.1 times 6.7 times 5.2 times. What the fuck is this? Oh, that did not calculate properly. That's supposed to be a multiple, bro. That's supposed to be a multiple, bro. These are supposed to be multiples. These are not. Okay, I'm gonna edit that. Edit that real quick. That's a multiple. This is also a multiple. These are not currencies. Okay, thank God I can edit these. Okay. Should be fine now, right? And then it auto correct itself. Yeah, okay, multiples. Okay, cool. Cool. I wish I had a oops, what the fuck happened there? I want one. See, I want a percentage term. Oh, this is not a multiple. Oops, that's a mistake. That is a mistake. Sorry. This one is not a multiple. This is a currency. Yeah. Yeah, this one is right. This one is right. I want a percentage. I'll do that. I'll do that. Call it percentage EV discount. We can do that. Is that discount's the wrong name for this? One minus would be the discount. So if I did, sure, we can do it this way. But I prefer looking at the other way though. Here, I'll call it like that so that it's easier. Yeah, that's fine. So I made this as a present, right? Yes. Okay. Okay. Sanyo Engineering, negative enterprise value. This is what I'm looking for. Yeah. It's not like 38%. So this would be interesting. These would immediately be interesting to me. 3% though. 4.1 times, 4.1 times, 3 times EV EBITDA, PE 8.4 times. Margins are really bad though. Oh, good interest, 30%. Wait, how did I? Let me just double check the calculation real quick. I just want to double check. Oh, I did one minus. No, I technically don't want one minus. I just want the normal version. Let's move it back up. Long-term investments exceeds. Okay, so if it's negative, that's a clear yes. And then the lower it is, the better. Yeah, so we're looking for levels of low here. So this would mean this is the most. 60%, so we can start there. So Nippon Retech. $328. 4% of yield. CAGR has been really bad the last 5 years. Worth looking into though. 68%. 5.4 times. negative free cash flow. Let's look for the ones that are an obvious no first. So let's do descending. So yeah, that would be an obviously no. And then 20 times 8%. CAGR at 26%. Wow. Last 5 years, not bad. Pretty fairly valued. Said no. No, so I would delete those ones. The goal is to find any reasonable basis to get rid of. $2.5, 5.4 times. So this looks very cheap. So I can move this down here. That's fine. This looks interesting too. What else? These imply some level of decent growth. Okay, this one looks interesting. Negative free cash flow. Okay, so these ones stand out the most. We will rank order them by this. So we'll look at Sanyo Engineering first. Good, I think I have a solid process now. Yeah. So we can filter through like 50 companies pretty fast. If we do them like 20 at a time. So it's like 10 pages. Each filter is 10 pages. Yeah, this should be fast. Okay, so price has been going up. Okay, 714. Around 30–40%. Sendo Engineering engages in the electric facility construction business in Japan and internationally. The company designs and constructs electrical equipment such as security and disaster prevention systems and electrical installation work in a range of fields, including public facilities, office buildings, commercial facilities. Okay. Okay. Various production facilities and air conditioning, ventilation, fire extinguishing equipment, as well as water supply and drainage. Okay. So all the different things. Let's take a look at profitability. Oh, profitability has been rather crap. Really bad. Okay, enterprise value. Okay, and they have a lot of cash on hand. Somehow was able to, okay, have more cash. But then LTM wise, they've been generating okay, so not as good as before, so it's a little misleading. But this one is 5, so around 10 billion enterprise value. So the enterprise value has increased. Yeah, the balance sheet, they have a lot of long-term investments, right? That's what I get the hint of. Yeah, 10 billion. They've had, how long have they had that much in long-term investments on their balance sheet? A long time. So somehow the company was very profitable for a period of time, and then they just stopped generating income because their business is really crap. What's share count looking like? Do they do buybacks? Let me just see. So they do repurchasing of shares. Let's see, the company's worth, if you buy 621 million, what's the price of book? 0.4 times. So they bought 620. This is interesting. Div yield 4%. So you get 4% div yield. They're buying back shares. So 15 billion M cap. Good dividend, buying back shares. Bought 600 million last time, so that's 4% of the register. 4% of the register, and you get 4% div yield. But then the thing is, their income is nothing, right? They're not generating anything. That's the problem with this. That is the problem. What's the income statement look like? Let's break. Let's take a look at this. So 51. So revenues increased 30%, but then cost of revenue is extraordinarily high. SG&A went up this year, so they're making no money. They're losing money. Fuck. Are they trying to not make any money? Yeah, it's like, what the fuck? company's not growing, losing money, but the sum of parts is higher than the enterprise value, so you're getting this entire company for nothing if you solve the long-term investments. Not the ideal setup though. They're not making any money. But like from a PE perspective, it's just trash. Yeah, so no, I would avoid this one. I would avoid this one. So new group, pass. Or no go. This was Sanyo. Oops. Sanyo over here. Okay. Chudenko. Equipment engineering company in Japan. Company undertakes electrical work such as light outlet, image, sound, TV broadcaster, power receiving, transforming. So very similar to other company. You know, energy related works, solar, wind. Okay, and this part is a little bit different. What does the Japanese company handbook say about this company? Chudenko. This one is 1941. Back a little. Back a little. So facility installation works and others, so only mainly two things. So not much. Profitability. Okay, so at least it's positive, right? They had a negative year, but for the most part positive in most years. Well, LTM. 10%. Oh, good. So most recent quarters, they've gone out of that rut. And resume profitability somehow. Income statement? 223. So current, oh, it's gone up. 223. 223. So stock price has gone up 223. Now they don't have cash. 228. 220. Sorry. Okay, so 200 on 2. Okay, so that's like 170. 170 on what? 170 8 times. 8 times, and then they have a lot of long-term investments. Is the idea right here, right? So let's see, where's my watch list? I'm gonna open up a Koyfin on the side so I can watch it and compare the results. So they have 100. Wow, 100. 100 of long-term investments. So then the question is, can they unravel that? Is it possible? That is super duper cheap. Do they do buybacks? That's very important. Buyback. Repurchase. Oh, we see some repurchasing. That's good. Very good. 1.5. 1.5 on. It's not even 1%. So if they spent 2, it'd be around 1%. But then it's not even that. What's the price of book? 28 times. So they've gone from 0.5 to 28, so it's not bad. What's there? 3.5 times. Wish it was cheaper. PE perspective, kind of high. PE perspective, kind of high. These ones trade at high valuations on the PE perspective because potentially they can't grow. Can they grow? Can they grow? They were at 230, I think. 223. What else about this company, Chudenko? So, around 60 billion enterprise value, decent margins, low EV multiples, good free cash flow. Okay, so that's worth looking into more. Okay, so today was okay, so this could be an A minus. This could be an A minus for sure. Yeah. This has potential. We just have to determine if it has any growth characteristics here. Let's quickly take a look. So, description. English, IR library. Quarterly reports. Oh, and they have that. Okay, wow, awesome. Wow. So revenue's growing, operating profit growing, more cash. Yes, a boatload of investment securities here. A boatload. Net assets 229 off of 229. Okay, so roughly 0.8 price of book. Okay, just tell me how you're going to grow, buddy. So both public and private capital investment remain robust due to the prolonged global instability with the impact of exchange rates. Energy and raw material prices remain persistently high with labor costs elevated as a result of worker shortages. Net sales and profit attributable to owners of parent hit all-time highs. We achieve our initial targets by actively pursuing measures under medium-term management plan. In November last year, we concluded a business alliance agreement with IAQ, a Malaysian company, and acquired 40% of its issued shares. Following the Iruboshi second stage certification that we received in September 2023, we are granted the Kurumin certification. So let's see, indoor electrical went up, air conditioning went up, information communication general work went up. Electric power went down a little bit, and net-wise, Chugoku region subsidiaries, they have subsidiaries, it went up 20. Operating profit, general work went up. Ooh, general work margins went up substantially, almost doubling their, Interesting. What is general work then? Indoor electrical, air conditioned piping, distribution line, underground power. Interesting. Orders received. Okay, so they received a lot of orders, and that translated to okay, so they received 105 billion yen of work, and they completed 90.2 of it. With the increase in the proportion of projects based on the percentage of completion method, the timing of net sales recognition has leveled off. Completed construction, percentage of completion. So 45% were completed, and then out of the 93 billion, 67% of that, or 2/3 of that was completed. Is that what they're trying to say? Interesting. Urban areas in Chugoku region. I just want to know how they're going to grow. Expand in urban areas. So improving efficiency and reducing costs. Ongoing challenges: responding to overtime work limit regulations, maintaining and improving net sales, further improvement in productivity, managing labor shortages in construction, employee engagement and job satisfaction, improvement of capital efficiencies through specific capital policy measures. Achievements: expansion of PPA business and steady progress in own decarbonization, investment in Saimaidan Group, acquisition of solar power secondary business, quality improvement across all construction work, improvement in construction profits for productivity improvement, steady increase in net sales. I just want to know how they increase their sales. Personnel with qualifications: electrical grade, first and second grade, higher. Okay, that's good. Plumbing, also more. So they have more employees. More new hires. Scholarship repayment support system. Interesting. Revision of starting salaries. University grad. 260,000 yen. That is 25,000. That's a $250 increase. Those are slave wages, bro. That's not a lot of money. Employee composition by age. Oh, so pretty evenly distributed, this company. So we're trying to figure out why they're be able to grow. We'll invest 40 billion in sustainable growth, including business expansion, securing, nurturing human resources, M&A in and around our core business, human resource development, decarbonization, promotion of environmental business as a means to assist our customers in their decarbonization efforts. Total consumption, solar power, PPA projects, and energy saving proposals. Investment in promising businesses. Shareholder return of 2.7%. Consolidated DOE. Comprehensively reviewed the business environment and implement share buybacks. That's 3% payout ratio. Share count has gone. Okay, it's consistently buying back shares. 1.4, so that's good because they're trading below price of book. Probably some low downside because of that, because they're consistently buying, right? If it drops more, then they buy more, probably. Safety, strengthening common foundations in the Chugoku region. What is the Chugoku region again? What is this? So, okay. Yamaguchi, Hiroshima, Okayama, Totori, Shimane. The largest island of Japan. Consists of the prefectures of Hiroshima, okay. Population of 7 million. Interesting. Okay. Business expansion through further strengthening of sales capabilities and instruction capacity, improving productivity across all operations, including DX. Strong promotion of human capital management. What is their ROIC? Let's review that real quick. Yikes. That's not good. What's the depreciation every year? 3.3. What's CapEx? Probably around 3 as well. Free cash flow, let's see. 10, 2, 6, 9, 8. Hard to say. 7. Well, 7 on an enterprise value of, that's not accurate because they have 100 million in investment securities. I think they should be more aggressive with their buybacks, especially if they're trading below 1 times book. What's their price? Fuck. $3,775. Low of 3,000. Gone up almost 25–30%. Yeah, they're going to eventually trade at 2 times EV/EBIT, including investment securities. So orders received are expected to decrease by 5.5 million due to fall in indoor electrical work. Net sales are expected to increase by 3.1 billion. Mainly due to increased indoor electrical work and air conditioning piping work. So this is from carried over from the previous period. So the question is, yeah, will it hold up? I don't have the utmost conviction of like how their revenues are going to continue to go up. Allocate 95 billion from business activities and the sales of cross shareholdings to growth investments and shareholder returns. Expand growth investments approximately 60 billion, 30 billion for business foundation strengthening, including DX promotion, 30 billion for business expansion, including environmental and related. That sounds kind of bullshit. Enhanced shareholder returns approximately 35 billion. Change to DOE target 3% of approximately 20 billion in dividends over the next 3 years. So that's 6.6. And it says shares buyback framework of approximately 15 billion. Yeah, but I don't know if spending 60 billion is prudent. So they're going to spend all of their investment securities over the next 3 years. Expansion of capital investments for workplace environment improvement. Does that really help? Human resource security and development, technical research and development. Like, what actually increases their bottom line, though? Environmental related businesses, strengthening and expansion of equipment construction business, strengthening and expansion of various businesses of group companies. Deploying the capital leave. I hope it translates into more earnings, though. How's that happen, though? How's that happen? Like, are they... Like, where are the results? So, income-wise, revenues have gone up. Margins, you can argue, went up. 6.6%. 6%. They could be more efficient. They're gonna unlock the value. I just hope that they're able to translate it well. That's the thing. $15 billion share buyback. Dividend yield would probably just go up naturally by doing that without even having to increase dividend per share. 130. 130 on this. A little over 3%. 4,600 employees. And then what is the macro of the Chudenko region, right? It's not all of Japan, right? It's just that region. Like, what makes them, let's see, 200 billion, $2 billion company. Oh, there's some overseas business. Malaysia, Vietnam, and Singapore. Interesting. Tokyo, Nagoya, Osaka. Okay. Insurance agency. It's worth into looking into, right? If they're saying they're going to expand to other regions or focus in Chudenko area, or that's kind of like where they have like where they're extracting lots of high margin sales and potentially, or they're based out of Chudenko. Yeah, I think that's gonna be A-. It's just like how will that translate into revenues? If it can translate into revenues, I think that's pretty good. Also, there's no 2025 integrated report yet. That's not out yet. Okay, so as a summary for for this company, they definitely have a lot of long-term investments that they're going to be unraveling. 60 is for business initiatives. 35 is as a return to shareholders through dividends and share buybacks. Margins seem to be improving. And hopefully the investment project that they invest that 60 billion into, which is a lot, which is basically the enterprise value of the company, hopefully actually increases, performance, like actual, like investment performance. Currently they trade extraordinarily cheaply in terms of if we factor in long-term investments. If we don't factor in long-term investments, then the multiples are still kind of high, I would say. Yeah. Some of this doesn't look accurate. Give me 1 sec. Yeah, it's not 10 times PE for sure. Maybe last 12 months it hit that? Oh, last 12 months recently it hit that. but that does, yeah, that's a little bit false. Maybe they had a really good 4 quarters, but on yeah. Yeah. Well, they had a really good last few quarters, yeah. Went from negative earnings to positive earnings. So yeah, figure out why did they have a really bad quarter? How that happened? Losing money to like making a lot more money, and then what led to them having that big contract because they suddenly got a lot of general work. So very optimized in that regard. The company won't go bankrupt because they have so much. They have so much cash. There's so much long-term investments. So yeah. Yeah, but I wasn't exactly sold on. The problem with this one is that I'm not exactly sold on the growth initiative. So if I need to spend more time, I would look into the growth initiatives. So this could be either B plus or like an A minus. Yeah, probably one of those two. Yeah. Okay, thanks for tuning in, guys. I'll talk to you guys on Wednesday. Peace. Oh yeah, today. So today we found, what did we find? We found 1914. Yeah, 3% dividend yield. Company buying back shares. Low margin business seems stable. I think it has low multiples. Yeah, low EV multiples. So then, yeah, we'll just put in the note here. So this one is Chudenko. Or it's all right. It's not bad, I would say. Watch list. So let's see, what's the div yield here? 3.5. Yeah, I think this investment really rests on what those initiatives are. I'm not exactly familiar with this industry that much. It's just kind of hard to gauge that, but yeah. I think if it provided 5% dividend yield, that would be pretty good. And then this one also has, I think, some element of overseas. Is there? No, there's no overseas. Energy. So yeah, if they can roll up, they can do M&A. Air conditioning, piping work, information communication equipment work, distribution line work, underground power line work. General work, indoor electrical work, air conditioning, information communication. What is this? This segment is responsible for general work related to sophisticated information and communication systems that are essential in modern society. We use advanced technology to meet the needs of our customers. That doesn't say shit. So why don't people just use more simple terms to describe what they're doing? Air conditioning piping makes a lot of sense. Design, construction, maintenance of air conditioning, plumbing, firefighting, and other equipment. We also actively propose renewal plans that utilize the latest energy-conserving systems. Indoor electrical work. This responsible for design, construction, maintenance of various kinds of electrical equipment. We also focus on environmental work, such as renewable energy. Electric power business. This segment is responsible for new installations of overhead distribution lines, replacement of electricity poles, and other work. Deliver a stable supply of electricity to our customers by combining highly reliable construction techniques with advanced technology. In the event of natural disaster, we move swiftly to the site of the incident to take on the task of restoring lifelines. Okay. Underground power line work for power distribution and distribution. Design, construction, maintenance of equipment for power transmission and distribution for underground power lines, as well as high voltage. Okay. Chudenko region. Okay, Chudenko region is a mainstay, and then they're expanding. Okay. Into urban areas. M&As and overseas subsidiaries. Chudenko Malaysia. Sugiyamaka Kobetsubi. Oh, that's a long ass name. So they can grow by acquisition. How much are they putting towards acquisition? They did say acquisition. A lot of it I just didn't sound very promising. DX promotion, BS. Expansion of capital investment for workplace, also BS. Human resource security development, also BS. Technical research, okay. Maybe technical research. So 30 sounds a little bit wasted. Okay, environmental related businesses and strengthening and expansion of equipment construction business, that's fine. Strengthening and expansion of various business subgroup companies, that's fine. New businesses, that's fine as well. $20 billion over 3 years, so 6.6. Is that enough? Are they distributing enough dividends? Setting share buyback framework. Not exactly persuaded by that, but worth looking into. Okay, thanks everyone for tuning in. I'll chat.